are listening to Let's Talk Sustainable Business.
Hello, my name is Uwe Schulte, and it's a pleasure to welcome you to this podcast in our series Let's Talk Sustainable Business, brought to you by the Conference Board Global Sustainability Center. Today, I will be talking to Filip Engel from Oersted about sustainable business transformation. First, let me introduce our guest to you. Filip Engel is Vice President Sustainability, Public Affairs and Branding at Oersted. Phillip has a Bachelor in Public Administration and a Master in Political Science from the College of Europe. He accompanied and supported the business transformation of Dong, originally Dansk natural gas, to Oersted from an oil to a 100% renewable energy company. Phillip did this in several roles like strategy advisor, stakeholder management, and VP of sustainability for the whole company. Welcome, Phillip. Please tell us a little bit about yourself and your role in Oersted.
Hello, and thank you for having me. So I've been with the company for 12 years, and as you said, I have responsibility for our global functions within public affairs, sustainability, branding, and marketing. And when I started and then it was called Dong Energy. When I started in the company 12 years ago, actually my very first task was to assist the CEO back then to write an op-ed in which we wanted to say that climate change was a problem and that we needed to reduce carbon emissions, and that we had a big responsibility to do so because we had very high carbon emissions. Actually, we were one of the most coal-intensive European utilities back then. So that was sort of where it started for me, and actually also that was also where the transformation towards green energy really started for the company. And since then, it's been step by step in the green direction. Back then, 12 years ago, we set a strategy where we said that we had 85% fossil fuels based energy, 15% green, and we wanted to flip that fraction around to have 85% green and 15% fossil fuels by 2040. We reached that last year. We reached that objective last year, actually. So that's actually how fast it's gone. And me personally, I've had the privilege of supporting the business in different roles. First role was as strategic advisor and supporting the CEO on his presentations and speeches, and then moved into public affairs sustainability, and then over time also I was given responsibility for branding and marketing.
Now that sounds really interesting, and we want to learn more about this. You talked about coming in and having to help writing an op-ed. So the question is, what triggered this when the company, and maybe you talk a little bit more before you answer the question about what Dong did at the time, so we better understand where the decision to change came from, that insight.
Yeah, no, that is certainly a very interesting question you're raising there, Uwe. So at that time, Dong Energy was a company that had basically coal-fired power plants in Denmark, and quite a few of them. It's interesting that today Denmark has changed a lot and has built up a strong green profile, and also has transformed a lot when it comes to green energy. But back then, Denmark actually had quite a lot of coal still. And being the sort of biggest company in Denmark, Dong Energy, our story as a company is really also the story about Denmark's energy transition. So at that point in time, we had a lot of coal-fired power plants, and we also had oil and gas production, mainly in northwestern Europe. And that was the context. And when I joined the company, there had of course been a lot of preparations and thinking about should we start to change as a company. And what triggered that change, what triggered those thoughts, you asked where where did that decision come from? And as with most strategic decisions, of course, it's something that you prepare, that you groom, that you think about for quite some time. And there were a leadership team, the CEO back then, and also some different people across the company who saw a need for changing the business, and there were some different drivers for that, for asking the question of if we should change. And one of them was the fact that they could see that climate change as an agenda was on the rise. And being a company with fossil fuels at its core, that didn't seem sustainable for a long term. We can get back to that later. But that was one reason. And the second reason was that the liberalization of the European energy markets was kicking in. So we were looking into a reality where our legacy business was becoming less and less profitable, and there was some major risks there in the horizon. So those were two of the main drivers. And what happened with the op-ed, if we want to circle in on that, was that it was very much used to be set the direction for the company going forward. So actually, when we published that op-ed, we had not said that much about how we want to change as a company yet. So that op-ed was a part of a major communication push where we announced that we wanted to change as a company. We wanted to go from 15% green energy to 85% green energy, right? And that was really interesting because essentially what the communication did, the purpose it served, was really also to set the direction for the company. The strategy was not really that solid at that point. There was not a very clear action plan in all places for how to get to that vision of having 85% green energy, of how to transform our energy mix. So what was interesting was that the communication, not only the op-ed, but the general communication that was made by the leadership back then was used to set the direction and say, this is where we need to go and we need to find out how to do it. And that was used to set the agenda externally towards our stakeholders, but also internally towards the employees and the broader leadership team back then. So it is actually a really interesting also exercise in change communication, in leadership communication.
Yeah, that sounds like a really big step, and I would like to know how those two different types of stakeholders responded to that. So the external world and your workforce as well.
So if we take the external stakeholders first, so let's divide them into the political stakeholders and also NGOs, and then also your potential employees, people who we would be interested in attracting to work for Oersted. Sorry, that was a slip of tongue, for Dong Energy as it was back then, and also the public, right? So and this was mainly in a Danish context. As you know, we had activities in other countries, but we were back then very much a Danish company with, I think, more than 90% of our capital employed on Danish soil, and most of our earnings, I think more than 90% of our earnings came from Denmark. So that was the context, and there was a positive reaction externally. There was already back then a debate about the future of energy with respect to how the energy sector contributed to climate change. That was already unfolding in Denmark, and there were a lot of political stakeholders who thought that we needed to act on that as a society. So that was received positively, and of course also from the green NGOs who had looked at the company and criticized it for how it had a very carbon intensive footprint. And certainly with that also from the broader public and from the people who we wanted to attract to come to work for this company. So that was overall a pretty positive reaction. I think it was also a reaction where there was a lot of skepticism as if with respect to if this could be done, especially from some stakeholders, such as some experts, but I think also from parts of the political spectrum. Um, Basically, people from the energy industry overall, there was some question whether this was actually realistic. Internally, is actually where most of the discussion took place, if you will. Um, Now, one has to keep in mind that, as I said, we were a company that had coal, natural gas, and oil. And especially with respect to coal-fired power plants, we were actually really, really good at it. We were one of the leading companies globally in building very effective coal-fired power plants, and we had a strategy actually back then to build coal-fired power plants in different countries. We had a couple of projects in Germany and in the United Kingdom. So this was very much a part of the company's DNA. It was a part of a lot of people's identity who worked here. So of course there was a lot of questioning around whether it was the right strategy to leave something behind that we were really good at, and then to start doing something which we weren't really sure what was and that we were not that good at. Today, Ørsted is the global leader in offshore wind, but back then the offshore wind industry was extremely nascent, extremely young. You couldn't actually talk about an offshore wind industry. You had onshore wind, of course, and we had some of that also, and that was becoming a more consolidated industry, but you didn't really have an offshore wind industry. So, and then suddenly we tell ourselves that we should change as a company and throw away what we're good at and do something else. Now that created, of course, a lot of internal discussion. I remember one episode. I was talking to a colleague, a senior colleague who I was talking to next to the coffee machines, and we were just talking casually around the transformation we were embarking on. And I remember he took a napkin and a pen, and then he drew a chart on that napkin. Basically, what that chart explained was that how our strategy would never be able to succeed. And one of the reasons for that was that at that point in time, green energy was much more expensive than fossil fuels. So how can you make a profitable business out of it? So that was very illustrative for the situation back then. There was a lot of internal questioning about the strategy.
That raises, of course, this is exactly what I anticipated, and that raises the question, what you think were the key success factors in turning this around? Yeah, because if you don't convince your own team about the vision, obviously the CEO brought in and a number of other senior managers, then those prophecies might have turned out to be right rather than, as it now proves, to be pretty wrong.
So I think there were a lot of different factors that helped the strategy along. So I think, as I said, there was a realization and a growing realization that we needed to act in one way or another, because we were challenged by how the power markets were evolving due to the liberalization, amongst other things. So the coal industry, to build and operate coal-fired power plants, it became increasingly clear that that could be a not so profitable business going forward. That was for one reason, because you had back then already more and more green energy being introduced, especially in the northern power markets, and that green energy had some of it had very low operating costs. So you were actually in a situation where it was taking out a part of the foundation for the coal-fired power plants, because there was just less need for them. Secondly, there was also given preference to green energy already back then compared to fossil fuels. So there were some factors there that were starting to challenge the profitability of the coal-fired power plants. We were also seeing European Union starting to take steps on putting a price on carbon, which could over time also impact the power plants. So that was one factor. So there was some awareness there that maybe something has to be done, at least with parts of the company. Secondly, I think how the management managed the communication internally and externally, I think was very strong and very insightful example of change management, as I said before. Um, to set those targets and to communicate externally that we wanted to do this, I think was a clever move. Often you do it the other way around, right? Often you would think that you devise a strategy, you spend a lot of time internally to think out and develop and then prepare a strategy, and then you communicate it. This was sort of done the other way around. Of course, some strategizing had taken place, but a direction was set that was communicated so clearly, so that it also was something that we became committed to, and that external stakeholders really started to expect from us. And here I think it's important to bear in mind that back then the company was more than 80% owned by the Danish state. And so of course the commitments we made, of course, they were especially important towards the political stakeholders who set the frameworks for energy policy, but who also essentially were our owners. So I think that was another factor that really helped drive and the transformation forward and help the strategy to succeed. And then, of course, there was also a third factor, which simply was that essentially the organization was also changed. There was simply a change in how the organization was set up to allow for people coming in and people being reallocated to take on the reins of building up that new company. So there were some replacement. Some people who didn't feel that this vision was right left the company. Some people were allocated to help build up the green area, and also resources were shifted towards the green direction. So those are, I think, three drivers that helped the transformation or the strategy succeed and really take a hold in the company.
That is very interesting, and I think a lot of people will listen to this with great interest, because companies are facing this situation again and again, and it is very difficult to make very fundamental decisions about the business model. What I hear you say is that you looked at what's material to you, and that was the carbon footprint, and that you said when we look at the future from a stakeholder perspective, what's expected, and also from a market perspective, we see new options, and and that was of course an entrepreneurial decision, we want to pursue those options rather than defending the past. Is that a summary that would resonate with you?
Yes, it is. Yes, it is, most certainly. I think it's important to keep in mind that when you talk about transformation, business transformations, often you look at companies from the outside or from the inside, if you will, also, and often you sort of really easily get this idea that it's sort of these are very sort of rational and very optimizing entities that will always produce the best possible outcome. At least that's sort of perception that you often find, and that I also can remember myself having from back when I studied. It's often how companies are also depicted in sort of the business press and media. But of course, the reality is that companies are run by people. And of course, most companies they try to make a living and try, and they have a clear direction, which is of course also need to be held up because they need to make a profit. But But how do you do that in the best way? That's really the question. How do you do that in the best way? And that's where the human factors come in. Because do you transform your company, or do you stay within your legacy business? And one of the of the ways for that we humans we function is that we have a tendency for valuing what we have more than what we don't have, but maybe will emerge further down the line. And that is certainly one of the biases that often inhibit that we make the change that is needed, even though we perhaps can see some signs that we should change. And we were in a situation where we did see some really clear signs that climate change was real, and that climate change would become a key factor long term in how stakeholders would look at the company. Now, stakeholders being regulators, being employees, potential employees, investors, etc. Now, back then we were not a listed company. We were listed in 2016, but there was an ambition to be listed. So we looked at that, and we asked ourselves, should we change? And I think this is very much what's important, and it's to look at what's coming your way, get those trends, if you will, right, and look at it long term. And it is a difficult exercise, but I think this is really also what sustainability is about. At the end of the day, sustainability is really also a prism that you can look through to get an idea of how will your market look like some years from now.
That's a wonderful picture. I must say I like your analogy here, and it is interesting that you talk about that human factor in this transition, and I think this is extremely important. But you also talk about the long-term perspective, and I think that is one of the main elements of sustainability, that you get out of the short-termism and you look in the long term, and that this is not commonplace. We can see that not all players in the industry had the same vision as you did, but I think we should now look at that napkin again that said this isn't possible. It looks to me as if you're talking about a more successful story than your colleague at the coffee machine was anticipating.
Yes, for sure, history has shown that it did become a quite successful story. Also, if you look at the energy markets, I think in general now there's consensus around that green energy is the future. All players within the energy industry, they are now moving in the green direction in some shape or form. Some quicker than others, but others are doing it. All are doing it. So that has certainly changed. And yes, I think if you look at Dong Energy, and we then became Oersted when we changed our name in 2017, and we can come back to that. Our valuation has more than doubled from when we were listed in 2016, more than doubled. And in the same time, what we've seen across the board is that a lot of energy companies, their value has gone down. So there's a clear indication here that the markets are now also looking at green energy as a place where the growth in value will come from, and where the value pools are. So that has certainly changed a lot.
Yeah, so I would like to ask you to brag a little bit more about what you've achieved. You're a bit too modest here. Just tell us what happened when you changed from Dong to Oersted, and how the performance of the company compares to when you were still Dong.
Sure, would be happy to do that. So let's just start by defining then how have we changed our energy mix? What has happened with the company? I said earlier that we had changed from from fossil fuel-based energy to green energy. That's what I call the 85-15 vision. If you want to break it down a bit, so what we did was that we built up green energy, notably with offshore wind, and we went from having very little offshore wind, really something that 100 people they were working on. They worked on onshore and a bit of offshore wind, to now is now the biggest of our business units, almost 3,000 people. It used to be the other way around, that it was the division that built and operated coal-fired power plants who were 3,000 people, and today there's practically no one who really does that in Oersted. So that has really changed. So we became the global leader in offshore wind. We have built around 30% of all offshore wind capacity globally. It's something we've done notably in Europe, but we are also expanding our business to APAC and to the US, so Asia Pacific and the US, where we want to help companies there to do their green transformation by building offshore wind. So that was one of the pillars, and the second was that we phased out coal. So we have phased out coal very quickly. Over almost a decade, we've come from a very coal intensive company to having almost nothing left now. We still have one small power plant based on coal that operates, and we're gonna close down within a couple of years, and then we're gonna have no coal left at all. So with that, we are on around 90% green energy now, and that means that we've also reduced our emissions. We've reduced our emissions with also around 90%. And in 2025, we're going to be totally carbon neutral, and we're going to have almost 100% green energy also. So that's the transformation of the company. And what you've seen financially is that our performance has gone also through a phase where our earnings have come from basically mainly fossil fuels, to now from green energy, and notably offshore wind. And of course, some may ask, so can you make that transformation and still make your earnings? And so I think it's fair to say that when you do a transformation like this, you may be in a situation where you short term must let go of some earnings to be able to long term create a more consolidated and stronger platform for value creation and for earnings for the company, but also for the societies we're part of. And that was also our case. So there's no question that when we started to close down our coal-fired power plants and to build up our offshore wind business, which of course required a lot of investments. When we did that back in 10, 11, 12, etc., our business was challenged. There was a short term. We had to let go of some earnings, but as I said, where we are now, we're in a situation where we stand with a much stronger business, also financially, than we did back then. Had we not made this change, I very much doubt that the company had existed today. So it's, to paraphrase our CEO Henrik Poulsen, we often get the question, but isn't it risky to change? And he often answers that question by saying that the risk is not to change.
That is a very good summary here, Philip, and I would like to thank you for sharing this exciting but also very encouraging story of a transformation from Oersted towards a totally renewable energy provider. So thank you very much, and I would like to continue that conversation in our next podcast with you to see your perspective on how the whole industry and how the green energy will develop. I'm looking forward to that conversation.
Likewise, Uwe. Thank you so much.
So, to our listeners, if you've enjoyed this episode, please remember to subscribe to our podcast series or explore the entire catalog of podcast programming from the Conference Board by visiting the website at tcb.org/podcasts.